Hello and welcome. Today, the focus is on the newly launched SBI Innovative Opportunities Fund. And to talk about it in detail, joining me is Prasad Padala, Fund Manager at SBI Mutual Fund, and our in-house expert, Dhirendra Kumar. Welcome, gentlemen.
Thank you.
Thank you.
Prasad, let me come to you first. When it comes to identifying innovative companies with long-term potential, what specific criteria do you look for?
For us, so innovation is about value creation. So the main theme would be value migration. So if you look at, there are companies out there who are innovating and taking away market share from the companies who are not innovating. So clearly, if you see in the market, so there's value migrating from towards these companies. So there are new business models coming, companies which are in internet space, e-commerce, or you talk about cloud as a theme, or you talk about electric vehicles. So these are all new business models which are evolving, and they are actually creating value for consumers as well as stakeholders. And there are existing companies, incumbents, who are also being forced to innovate and are to actually survive in the game. So even there, we are seeing a lot of innovation. So it would be a mix of these both spectrums, the new age companies as well as the existing companies. And in existing companies, so I mean, they could be innovating in a portion of their overall portfolio. So we'll look at least a 15% kind of a value generation from these kind of innovation themes. So we'll look for those kind of companies.
All right. And what inspired you to launch the fund at this point of time? Was there a specific research or trends that convinced you that this was the right time?
Sure, definitely. See, innovation as a theme, it has been playing out for quite some time. But what we have seen is that the pace of acceleration the pace of innovation is accelerating. And also the second point is that many of the new age companies and the new business models which are evolving. So the entire action was there in the private space over the last decade, where the primary beneficiaries were the private equity companies and the venture capitalists. Now we believe that most of these companies would be coming to the public markets, where the public market participants will have an opportunity to play these companies. So we might be a little too early to this trend in terms of playing those new age companies, but we want to be ready when the action starts, and we want to benefit out of it. So broadly, that's the thought process.
Okay, Prasad, many successful companies, whether the traditional ones like Tata Salt or tech giants like Meta, they've thrived on continuous innovation. Given that innovation is essential for all, what makes focusing specifically on innovative companies so crucial? And also, how does this focus offer an edge compared to evaluating a company's overall business strategy?
Sure. So definitely, I mean, as equity investors, we want to stay with the winners. So I think that is an essential thought process for all the funds. But in this fund, we are specifically focusing, I mean, almost 100% we are focusing on these winners and companies which are innovating right now. So for us, innovation is something that is new and something that is better. So for example, if let's say, if I take digital banking, I mean, it is not new. Of course, it has actually gave an edge to you sometime back when it was a differentiating factor. But now everybody has, it's not a differentiating factor. So for us, any company which is actually have a differentiating edge, which is actually using innovation. So it can be a new age company. It can be an old age company. Like, I mean, you mentioned some of these new age companies, where the entire business model itself is new, and they are riding these new emerging themes. So that those will definitely be part of portfolio. And there are companies, the old economy companies, where there are innovation happening in pockets. So for example, it could be a pharma company which could be launching these patented drugs, the new chemical entities, etc. Or it could be an industrials company who would be launching a differentiated product either through their own R&D or through technical collaboration. Or it can be existing OEM who would be adapting to this trend. Suppose, let's say, when they see electric vehicles emerging, and they see that this is the trend that is emerging, and they invest into those trends. So it will be a mix of all these companies. And then again, we have a flexibility of the multi-sector and multi-cap, and we'll have a flexibility between choosing these new age companies and the old age companies. So we'll basically be a little bit more tactical about it based on our market view and all that, and we'll use this flexibility to our advantage.
All right, Dhirendra, moving on to you, you have a wealth of experience and a deep understanding of mutual funds. So from a historical perspective, how have innovation-focused funds performed compared to the more traditional funds?
No, I think, the way I look at innovation, that a company to survive and thrive must be innovative. Uh, and, at any point of time, the companies which lead the pack, whether it be, uh, I can recall many examples. For example, Axis Bank going about, or, the launch of the private sector banks, the modern private sector bank, and the emergence of centralized banking was one of the big innovative thing and was a great competitive advantage. They were able to open their ATMs, and that was able to eliminate the teller machines in the banks. Or look at Axis Bank, which came from nowhere. It is among the newest bank and has a large network entirely backed by the ATMs, and it was able to gain a competitive advantage. So innovation at any stage. Uh, for any actively managed fund, a fund manager's job is to find a company which will be able to build a competitive advantage, and being innovative is a very critical part of it, whether it be making steel and just changing your process to make it optimizing it, or working on your logistics, things like that. But what Prasad is facing here is that what he's actually trying to capture here in this fund is something which is dominantly innovation led, which has not existed, and it's a new thing which is emerging, and which can also drive a lot of behavioral things. Uh, and many technological changes actually, are the emergence of technology, or combination of technologies which makes possible. What we are used to Uber today would have looked like a great innovation or unthinkable 10 years back. But today it is very much a part of it. So there will be many things. I think it is. The way I look at it is, it is essential component of any actively managed fund. And what Prasad is saying is that that should be the significant driver of the company, not the usual one.
All right, but Prasad, like in the 90s, Intel led the tech space, but now it's trying to keep up with Nvidia. So how do you adapt your strategy to cope with changing market conditions, especially in the rapidly evolving sectors like, there's EV, there's AI. So
Sure. I think that's an interesting point because, if you look at technology or innovation as a space, I think that the only constant is the change. So business models change and they change very fast. So I think as a active fund manager and having an active research, so we'll be constantly looking at these trends, how they're changing. And if you look at it, some of these trends are if you take a close look at what is happening on the ground, like for example, let's say Intel was the leader when CPU market was actually growing, and then after a point it was stagnating, and then GPU market has started growing, and Nvidia has an edge over it. And why they have an edge, whether it is sustainable. So we'll basically having that active research, so we'll be able to take a call on the business, whether the GPU market is picking up, so who is the winner in that space, whether they have the competitive advantage. So we should be able to see that trend happening. And so in our portfolios and some of our other portfolios, we've actually captured some of these companies like Nvidia. And when we saw cloud as a trend emerging, and then we played Microsoft very early. So I think if you actually keep your eyes and ears open and then focus on your process and ground up research, I think you should be able to identify these trends. Then you can actually create a value when you see these trends happening.
Yeah. Okay, but investing in such companies can also be risky. We've seen with the steep share price declines of companies like Paytm and Nykaa. So what are the main risks you see in this space, and how do you mitigate them to protect your investors?
Sure. I think that's a very important aspect because if you look at most of these new business models, they're still emerging. So inherently, they come with a lot of volatility. So it can be a new competitor entering to the market, or it can be a technology change. For example, let's say if now everybody is very gung-ho on electric vehicles, suppose if there is another technology that comes and makes the complete business model irrelevant, or there can be a small regulatory change like Paytm. So you have to be, I think, very dynamic about it. I think this is not a buy and hold kind of a portfolio where, this is not like a consumer, let's say Asian Paints of some time back when you just buy and then It's not a very stable kind of a business environment. It is very dynamic. So you have to be very dynamic about it. You have to actively look at what is happening on the ground. So some things are easy to predict. For example, let's say, like I gave an example of Nvidia, you saw that trend changing and then CPUs actually falling. Or when you say, food delivery, for example, let's say sometime back there were 15 companies. And then if you had invested in any other of the other 13 companies, you would have lost value. Only 2 companies did well. But when you are tracking these companies, you know which companies are winning. They are constantly taking away market share. They'll have better, superior profitability metrics. So there are some things that you can do if your process is right. I think you can capture. So there are some things which can happen, for example, out of your control. For example, let's say what happened with Paytm with the regulatory change and all that. But still, luckily we didn't have Paytm in our portfolios because, for some other reasons. But again, I think if your process is right, you will be able to capture majority of them. I don't think you will be able to capture all these things. But inherently, I think you should assume that the entire portfolio of the universe of the stocks come with a greater volatility, thereby with a higher risk. But I think they also offer a higher growth potential. So that's why we're excited about the overall space, despite there is a higher risk.
All right. Dhirendra, given the rapid evolution of sectors like technology and healthcare, how do you see investment strategies evolving in mutual funds? And also, do you think innovation-focused funds are they here to stay, or are they just a passing trend?
No, I think they are here to stay because we have seen all the behavioral changes. If there was a focused innovation fund, then we have seen a lot of things that have changed in our life. The way we moved from television, terrestrial television with Doordarshan, to a cable network, and then to a dish TV. These are all innovation, and because the advantage of some of these innovations is that there is a land grabbing opportunity. When something changes, then the winners in that segment, or something which is changing, or something which is evolving, or something which we get used to happens, then there's a big winner. And many a times there are just 1 or 2 big winners, and culture has a big role to play. How you configure yourself. So I think there are a lot of emerging opportunity, because now in this flat world, 30 years back, it was different. Somebody who was able to build a scale and was ahead of others based on some capital, some licensing, some competitive advantage. Today, it could, 2 kids could be actually doing things. We have a lot of success stories. When you look at, and the good thing is a mutual fund is here to stay simply because it is, in the mutual fund format, many of the risks are getting eliminated. It's like, as Prasad was saying, that, if you look at the food delivery business, the way Zomato or Swiggy evolved, the way Zomato started from as a catalog business and then into food delivery and evolving the whole thing. And after it has emerged, good part of the risk has been eliminated as mutual fund will get in at a stage when the initial risk has been reduced, not eliminated substantially. There could still be others, and there could be other kind of issues to worry about. I think it is here to stay. It's a very demanding fund. It is a fund where Prasad has to really go and get into the mind of the guy who is setting up, and he has no track record. And he's promising because he has no track record. He can think which others can't. And that is also the biggest risk, that because he has no background, he has nothing to bank on. That does he have a track record? That how you can't really get into. Only to an extent you can get into, and then the context, the circumstances are also a very significant contributor to the success of many of these businesses. So let's see. I think it is here to stay. Not only innovation as a specific fund, but innovation as a very dominant component of actively managed fund, and that will also prevail, continue, and dominate. So yes, innovation is going to be a very significant driver of Indian funds in future, whether it be on a standalone vehicle or as as part of the mainstream funds.
All right, Prasad, how do you ensure diversification in the fund while focusing on innovative companies? How do you build conviction that one innovation will outperform the other?
So once we identify the universe, so the focus will be completely bottom up. And like I said, in terms of diversification, so we'll be looking at not only new age companies, but even incumbents who are innovating. So it will be a good mix of both ends. And we will be, I mean, in terms of identifying which theme is better, so we would not actually go to that extent. I mean, it would be completely bottom up. Suppose if I'm looking at, I mean, as long as, let's say, both companies are in my universe, as long as both are innovating, then the focus will be completely on bottom up fundamental factors, like which company is offering me a better growth for the value that I'm paying, which company has a better resilient business model, more which company can offer high potential for cash flows and return on equity in the longer term. So broadly, so these would be the factors that we would be looking at.
All right. And which trends or sectors do you believe will drive innovation in the next 5 years? And how is the fund positioned to benefit from these trends?
So some of these trends are, I mean, there are some trends that are evolving. These emerging trends are, I mean, for example, internet itself is a trend. I mean, you see a lot of these internet companies are coming, and then businesses are shifting from, let's say, offline to online because of these platforms. So that is one trend. And many of these consumer trends are actually going direct to consumer. So there are many companies that are yet to come to the market in that space, but I think that will soon happen. And then there is cloud as a trend, actually that already we have seen acceleration over the last decade, but I think there is still a lot of room to go. Their initial beneficiaries were all these infrastructure players like Amazon and Microsoft of the world. But I think the second leg, I think there are a lot of software companies which are again listed in India, which are actually more adapting towards this SaaS model, where software as a service, selling on cloud kind of a model, where that trend is picking up. So we see those kind of companies will be benefiting. And then there are other trends like electric vehicles, where, I mean, you see the entire auto industry is in the transformation mode. There are some who are adapting better and some who are not adapting better. And there are some companies who are supplying to these companies. So broadly, these kind of companies we are seeing. And even on the manufacturing side, suppose let's say in pharmaceuticals, we're seeing some companies coming up with differentiated, patented kind of products. And even in industrials, we are seeing some companies coming up with differentiated products. So broadly, so these sectors will, are in terms of sectors, so technology, like I mentioned, technology, consumer, pharmaceuticals, industrials, auto. So these would be, will contribute more compared to commodities sector, cements, etc., where we see less innovation happening.
All right. And when it comes to innovation as a theme, what are your growth expectations and what key factors will help achieve these goals, you think?
Sure. So growth expectations, so I think, I mean, if you look at market, I mean, if you look at the top line expectations, anywhere between, let's say, 9 to 11%, I think innovative companies should slightly do better. Because one, I mean, even if you look at the traditional companies who are innovating, the thought process is they should, by innovating, they should be able to take market share. So ideally, they should grow faster than their own industries. And also the new age companies, because the trends are emerging. And so these companies, again, the entire value is actually migrating from, let's say, offline to online, or let's say ICE to electric vehicle. So ideally, so even the new age companies should grow faster. I mean, at least like 13 to 15%. So on an average, the mix should actually grow faster. So like I said, I mean, the focus is slightly more on the growth side. So as a portfolio, I would look at slightly higher growth than the index. And like I said, also it comes with a little bit more volatility. So it's like a higher growth, higher risk kind of a portfolio overall.
Dhirendra, the last question to you. What advice would you give to investors who are looking to invest in innovation-themed funds, and how should they evaluate the risks and potential returns?
Sure. So like I said, so inherently you should look at it more as a higher growth, higher risk kind of a portfolio. So it is not for a first-time investor. So it is for those investors who understand the theme, who understands the risks involved, who understand that they're actually investing in some of these emerging themes. I mean, some of them may work, some of them may not work. So I think ideal for those investors who are looking for long-term capital appreciation with at least like a 3 to 5 year kind of a time horizon, and are okay with the short-term volatility. So broadly, that's the kind of suitability in terms of investors. Yeah.
Dhirendra, your take on this?
Yeah, I think it is very important for investors to be, be very prepared for the big ups and downs of these companies. And, this particular segment of the company which Prasad is referring to, will come with extreme gyrations with most investors. It is nice. Most investors are pretty happy with it. They're really okay with the volatility if it is the upside volatility, but they're not ready for the big decline, So be ready for, one should go and look at what happened to FANG Plus, the concentrated 10 stock portfolio. When it falls, all these big companies, they also go down by 30, 40%, 50%. And that is sounds very unreal. Last couple of days, Nvidia in couple of hours has lost some big capitalization. And during the day, it actually moves in a manner which is almost like capitalization of the addition and deletion in the capitalization of Nvidia is equal to top 10 stocks in the country. It is of that scale. So it could be quite mind-boggling. So take a long-term view, be steady about it, and also give Prasad an opportunity to prove his metals, and then put your money in a steady manner as well. Because this is something, if we actually there's a scope to add significant value in this kind of fund.
All right, then investors need to be prepared for the big ups and downs and take a long-term view. With that, it's time for us to wrap up this chat. Thank you, Prasad, for taking the time and speaking with us.
Thank you.
Thank you.